So traders, we are wrapping up the month of June, and I wanted to kind of go through exactly what trades we were executing on inside of our Smart Money chat room, because Kyler absolutely decimated the month of June. There was a tremendous amount of turbulence. We saw a lot of sell side coming in on the S&P, and we saw a lot of buy side coming in on the dollar, but we were able to trade a tremendous amount of different currencies, even outside of some of those, most prominent ones like just the US dollar or the Japanese yen. But Kyler, what's going on, man? The channel hasn't seen you in a minute, bro. What's up?
Dude, I think the last video we did was that big crypto trade. So yeah, it's been a couple months, dude, but we're back, and we're back with a vengeance on the markets, because we pulled in the last 2 weeks, it's been close to 2,000 pips. So it's been an absolutely insane last month of June. So I'm excited to get into it, talk about these trades, and let you guys all know kind of how we view the trading business and how we get in on these trades, which is it's gonna be very fun to talk about.
Yeah, one of the things that I was afraid of was, as we are all realizing that the recession is coming, it's always kind of that lingering fear of, are we going to be able to capitalize on this? Like, you know what I'm saying? Like, are we going to be in the right asset class? Are we going to be able to time positions the right way? But so far, if this is the recession, so far we're 2 for 2, because April was an amazing month. Not April, but I don't even remember. But I just know May and June have been absolutely killer months. And so far we've been able to really catch a tremendous amount of that US dollar buy side. But let's take a look and start off. I know you said some of the first trades we got in on here was the NZD CAD, and that's what we're looking at right now, actually. Do you see my screen?
Yep, I see it.
Okay.
So yeah, NZD CAD, we took that trade the first week of June. So like we kicked this whole month off with the first week with some killer trades, and we started selling the NZD CAD. And if you guys understand, we always primarily put fundamentals first and macro to help us derive the edge. And in a way, we can say what we're doing is we have more of an informational edge, where we understand what the current market pricing is. And all that simply means is that we understand where current market positioning is based on the current fundamentals.
Yeah.
Now, the crazy thing with this NZD CAD is that we were looking a lot at the Canadian dollar, right? Mm-hmm. So we really start from start to finish, we look at these indexes, which if you guys have filled out in the comments down below, you looked at the CAD index, we really first start looking at the structure. So we look at the structure, we have an idea of where that's headed. And when we start moving into the fundamentals, that's where we have to understand really what regime we are in as far as monetary policy. And a lot of things that, you and me tell our traders is that we have to understand what the characteristics of these currencies are, why they move. So with this NZD CAD trade, the biggest thing we were looking at was seeing a little bit of risk off flows with the NZD. Mm-hmm. So we wanted to, sell the NZD, but at the same time, we pair that up with the Canadian dollar, and we were looking at understanding monetary policy. And we saw that the Bank of Canada was pretty hawkish. And if you remember some of the monetary policy statements, they started to release their reports, their minutes, talking about how they wanted to, that they would do further tightening if needed. So that was where we started to really capitalize on, market pricing that Canadian dollar strengthen. And we can see that, around that June 5th, that we ended up taking taking it all the way back to make a new high.
Yeah, and I'll go to NZD CAD here, actually, because that's the Canadian dollar index. Here's our actual NZD CAD, and this thing, man, poured sell side all the way down to that first target. And I know you mentioned on this thing that you wanted the CTP1 at 81.20, and we smashed past that, and we floated right at the 800 level. Never quite got there, but a lot of our guys rolled out of that with some stop outs at in the profit. So
exactly.
That's awesome.
And the thing about these levels, guys, is that when we have these take profit 1, 2, 3, or however many profit targets we have, we use these levels obviously to take some of our position off, but at the same time, we generally use it as a rule to when we would start moving stops, right? We're not going to leave a full 2% risk on if this thing starts to hit off on our TP1. Right. We want to at least mitigate some of the trade, had that move down, the stops move down to where, let's say you risk 2%, and let's say this thing hits your TP1, it pulls back. Well, it's completely asinine to take a full 2% loss after you just hit off on one of your targets.
Yeah.
So that's really where we start to manage with some of our levels, our targets. That's why we have them too. But yeah, we did smash through that take profit one.
Yeah. So moving on, US CAD. So that was just a day later, if not the same day. Sorry, USD CHF. Mm-hmm. So we had a USD CHF buy, keep risk in check, so on and so forth. Entry at 96.40. Tell us a little bit about what was happening in this position. This one was
a fun trade, dude. This is
oh my God, hold on. I want tell us about it. I want them to kind of take a look at the entry and everything, and I want to show them exactly what ended up happening on this bad boy, because everyone was like, what did you see? Here we go.
I know. But dude, this USD CHF was like the primary, like when you talk about edge on the channel, like having an edge.
Yeah.
This was like the holy grail. I hate to say holy grail, but like this was like the epitome of our edge that we exploit in markets when it comes to mean reversion or the ROD strategy.
Yep.
And again, if we start from top down and we look at US dollar, we look at the CHF, again, we were looking at USD, we were understanding what the Federal Reserve was doing, and we were understanding where the current market was priced when it comes to interest rates. And we started to come to the conclusion that this Federal Reserve, the U.S. central bank, was going to be a lot more hawkish. And hawkish simply means that you have a central bank talking more about either raising rates or pulling money out of the monetary system, which in this case you tend to see good for the U.S. dollar. So we were all looking at that. The dollar was down, and we took a break of that 96.50 level, and this shit just.
Oh my God. So here we go. June 6th, we were right around that. I can see the breakout that you wanted. Nice mean reversion play. That's really one of our core strategies. And what's funny is it's like TP1 97, TP2 maybe the highs at around 1.0, and we absolutely just smashed towards those things.
Off on that.
Yeah, so hit TP1, hit TP2. And again, this is another prime example. We didn't mention it before on the NZD CAD, but this was a great example of economic divergence when we basically had both currencies going in two completely opposite directions. Hard to spot those, but if you're in smart money and if you've gone through the university, when those moments happen where you have that one currency weakening and you have that one currency strengthening. The combination of those are the single best trades in Forex. There is no strategy. There is no BS indicator harmonic crap. None of that matters. The best trades on the planet in FX is economic divergence, and that's the foundation of where we built our strategies. And that's why when these kind of trades happen, they can oftentimes be quite explosive. Because even on that TP1 on the NZD CAD, it hit off immediately. The TP2 was what kind of took some time and ended up getting us pulled out of that position actually.
Right on. And if you pull up that CHF index quick and we go to, let's say, June 6th.
Okay.
Yeah, we'll look at daily should be fine. So around June, right there before that little sell-off. So right in there, I remember I woke up one morning, you texted me, he's like, yo, look at the CHF index. And I was like, dude, I've been watching that shit. So we saw this thing setting up. And again, we're in before the trade happens, and we saw that CHF could have a little bit of weakness just by how we're viewing the current market, feeling that we're in.
Yeah.
Because a lot of this is intuition, right? As you get trading, you feel a little bit of intuition about how these markets could play out. Sometimes you trust your gut. Obviously, you get used to it. But that was one of the trades where we saw this CHF index looking like it was going to weaken.
Yeah.
That translate into our USD CHF trade as the USD CHF starting to strengthen.
Yeah.
Not only that, like I said, we're looking at the hawkish Federal Reserve where they just want to keep, raising rates, go, go, go.
Right.
So that's why this thing moved absolutely parabolic.
Yeah, it's really cool. I mean, to see markets in this tight consolidated high, that's really what you want to see on such a massive momentous leg. A lot of traders don't mix volatility and market structure into the equation when it comes to how they are taking trades. And that's just a massive disadvantage, because if you aren't taking into account volatility or how soon markets ran to a certain position, to kind of give you an inclination as to, hey, this is what is now more plausible to happen, right? Because markets ran so fast on a shaky leg with fundamental data that might be different than what's actually transpired in terms of that trajectory of the move. I mean, there's so many different variables that could give you a nice explosive move, and that's exactly why that USDC. Let's look at it one more time, man. One second. We just got that thing.
It's too perfect.
Yeah, it was a solid one, man. Especially after we see this massive collapse here. This is a daily, and then for us to just retest that high. I mean, and you obviously hit off right on the retest of the high. That was a sick one.
Yeah, and this is something too. Like when we had that take profit, like at that just parity one on that USD CHF. We're not. If you think about it from a structural standpoint in the market, we're not really asking for much, right?
Exactly.
We look at this USD CHF. All we're doing is asking for a retest of the high. We're not asking, being greedy, saying, hey, we want to make new highs. We're just simply asking for this thing to go back to where this market was previously trading.
Exactly.
So that's why that one flat was a freaking perfect target.
Yeah, it was for sure. Okay, Euro U, and we're going to speed through these. There were a lot of trades taken. If you guys want to come in and take a look at some of the previous trades taken, or if you have any questions about what trades maybe we didn't discuss today, if you get inside Smart Money, you send us some messages, send us a screenshot of a particular trade that you saw. We'll basically tell you exactly what it was in terms of why we got in on that position. And that's what Smart Money is all about. It's about really understanding what the institutional guys are doing and then extrapolating that into your actual trading day to day, because these guys are pushing out a tremendous amount of detail. Like there's a lot of fundamental data that gets pushed out on a daily basis that could really drive a lot of traders mad. But if you know exactly what's going to give you capital flow, then you're going to have a better idea. So get in Smart Money if you want to know exactly what's happening on each one. I'm going to skip a few, but let's look at this Euro U real quick. What do we see happening on this one?
Yeah, so this was actually a very interesting one. Again, part of what we were doing, again, was looking at this US dollar. So similar to how we just talked about the USD CHF, why we got in on that USD string. Same thing with this Euro USD. Now, the interesting thing about this was that we had an ECB conference come out and Lagarde came out, and they were hawkish. They ended up raising by like 25 basis points. Mm-hmm. And generally that should be good for the euro, right?
Yeah.
But we ended up seeing that euro start to sell off. And that kind of gives you a hint, right? When you have something that should drive this currency to the upside or strengthen it, and it does the opposite, that's kind of a warning sign. But this was another ideal setup from a mean reversion standpoint that we ended up playing and then aligning with the USD index, then also aligning with the USD fundamentals, which is really the why for why these markets and these currencies will start to trend. Okay.
So let's see here. I'm going back. This thing was a pretty sell side. Let's go to the 4 hour, get us a better view of it. Anyone that's up on game and really, paying attention to what we're doing here, they're gonna notice a lot of similar. They're gonna notice some similar attributes when it comes to what our actual the structure is that we look for. But nevertheless, here we go. So entry 106.69, TP 105. So if we pull back here, that was called out again on the 6th. You were really busy on the 6th. We can see that this bad boy it pretty much immediately took maybe 2 days or so, but it immediately poured sell side. And again, another beautiful example of economic divergence. This was right around the time Euro was facing just tremendous amount of weakness earlier this month. And this US dollar was just, as we know, just pile driving to the upside. Let's take a look at our US dollar index real quick. You guys can see that this US dollar index from June 2nd, really, we just had a massive run all the way to the 15th. So the first half of the month, we just had nothing but US dollar strength. Conversely, if we look at the euro, at around the same time, lots of chop, even a little bit of buy side, but just so much chop that it wasn't really affecting us. This is the cool thing about trading economic divergence. when you say, okay, I want the euro to maybe sell, I want the US dollar to buy, even if the euro doesn't do anything, as long as we get the buy side on the US dollar, take a look. We still had an amazing trade opportunity. So
exactly. And I think really quick, I think the best way to, because some of you guys might be confused, you trade the Euro USD. It's not, you can't treat the Euro USD as one, right? I tell everyone, if you've been on a call with me, for the students, which they know by now, you can treat it or understand it like an arm wrestle, right? You have two people arm wrestling. If you have two people of similar strength and technique, well, you're probably gonna sit right in the middle. But if you have one dude that's fairly weak and he has no arm wrestling technique, if you have one dude that's just got these jack Popeye forearms and has really good technique, well, you're gonna see that guy easily outweigh that weaker dude.
Absolutely.
That's the equivalent of a parabolic move driving these currencies up or down.
Yeah. Yeah. And again, that's going to be extremely insightful for you guys. But remember, you still need to understand the fundamental catalysts that are driving these price moves. You still have to have your currency indexes. If you don't want to get in smart money, if you don't want to get in university, you have to at least get your indexes, and those are in the bio. And that's going to allow you to see every single major relative to all the others. And that's really what is one of the things that foundationally allows us to take positions like these. So let's get out. There's a lot of trades. You wanted to talk UK 100. Let's do it. What's up?
Yeah, for all the guys that love these indices, I mean, this is honestly, dude, this is probably one of our first trades we blasted out for an indice, UK 100. And to keep that short and simple, is we were, again, looking at macro, but we were looking at the whole inflationary story inside the United Kingdom that affects the GDP. And if you guys have kind of stayed on top of different macro developments, or at least read what's going on, they are in a stagflationary period, which simply means you have a time where inflation is on the rise, pretty high, right? They're at like 9%, but you then have growth starting to slow. That is what stagflation is. And that's generally not the best for any sort of equity market. So that was the primary reason we wanted to start, selling the heck out of this UK 100. And I mean, for the guys in our community doing the funded trader program, this thing absolutely helped your guys' portfolio a tremendous amount. So that was just, quickly one of the trades that we got in, and that's why we got in. Again, macro based. Yeah.
And so that, Kyler just mentioned something that we were going to drop later, really the first month of July. Everyone sees what's happening right now in the prop space. It's encouraging. It's kind of exciting to see that there are people or organizations that are, doing the best they can to try to help traders, fund their accounts. Because the first video I ever dropped on this channel was around funding. It was about how much money should you start with. And I mentioned, hey, if you don't have $10,000, then you really shouldn't really be in this industry in a significant way. And then you have all the maniacs that talk about flipping accounts. Well, there's a reason why the prop industry is blowing up, because people are slowly starting to realize that flipping accounts is not the best strategic way to be in this industry and scale, in the long term. So we, as you know, have come from an institutional background. We have a lot of partners. We have a lot of affiliates, and we have a lot of people who basically believe in what we're doing, and we have been able to put together something really, really awesome on the funding side, a legitimate prop firm. And so that's something that we're going to be releasing later this month, and we're really excited. We've had a bunch of guys go through it already inside of Smart Money and inside of the university, so everything's working really well, and there's just a lot of great attributes with working with us on the prop side, rather than some of these overseas companies or these companies that are promising you these refundable registration fees where basically they're making money off of the traders who are paying and who are losing. That's not a real prop firm. So we have something that basically is going to really be legitimate, and I think add, who knows, revolutionize a little bit what's happening on the prop side. So UK 100. Let's see. What do I throw in? Let's see. I just can throw in UK 100 over here.
Yeah, just type in UK 100. Yeah, dude. So we were like, as far as timing, dude, we were pretty spot on with this. It pulled back very briefly.
Yeah, look at that.
We just pinned the high.
Yeah.
And this is where things are very interesting, because you have the market, this equity market at a high, but you have something macro fundamentals telling you it should be valued at a lower price.
Amazing.
So yes, so dude, that's like the ideal mispricing in markets.
Oh my God.
Where the story doesn't add up.
Yes.
So this thing just completely
beautiful.
Bloodbath.
I mean, absolute bloodbath. And again, recession's happening in real time, able to capitalize on it. That's the name of this game, guys. And you know, all these trades are being met with live capital. This was one of not only the best performing months when it comes to, pips earned, but we're moving a lot of cash on these positions, right? And so, it's just really exciting to see, obviously, the decisions work out, but the profits being made, not just from us, but everybody inside of Smart Money, everybody inside of University. It's cute, it's fine, it's dandy to be calling out positions, but when you can match that with like sizable portfolios, it just changes the whole game. So we've been able to really do an amazing job with our fund and with everybody inside of the community there. So should I skip ahead? Do you want me to keep running through? What are we looking like? I can go to the next one.
I mean, we've had so many good trades. I think if you jump ahead to, the NZD CAD we talked about, there's another opportunity. I think what I want to touch on is this. Euro JPY played out to hit our TP1, and we managed it, pulled back part of it. That's why we always focus on managing risk. Now, this is a beauty. AUD CHF right here.
Okay.
So if you guys, we just talked about the USD CHF. We were wanting to sell it. Now, this next week, the week of June 13th, was when we wanted to start looking for some CHF strength. And similar to how we just talked about the UK 100 being at the highs, but yet we understand there's macro and fundamental data saying, hey, this equity market should probably be valued at a lower price, was very similar to this AUD CHF. Now, the primary reason we got in on this CHF strength was looking at the Swiss National Bank. And I'll keep things short, but we're looking at the Swiss National Bank. We saw that there was a really kind of again like a mispricing, or the market hadn't fully accounted for a hawkish Swiss National Bank. And you and me were pushing out to the guys inside the lounge that we were thinking the Swiss National Bank could be a lot more hawkish, wanting to raise rates. The market never accounted for that, and that's why we had such a crazy parabolic move on the CHF.
Yeah.
And we said it was best to play this thing against the AUD CHF. So that's why we ended up taking that. And that thing smashed out on the TP2, that 6,800 level. So that was a beautiful, beautiful trade.
Yeah, so TP1, TP2, TP3, we can see this thing ran all the way sell side. And you mentioned something there, best to pair it up with. We're trading economic divergence again in that instance. Because it's not enough to just know what's happening fundamentally. You also have to know what is happening fundamentally on the other currency. And it has to happen in synchronicity. You have to find those moments. And guess what? You can't want that. Like, those moments have to come. You know what I'm saying? I think a lot of traders try to force positions and force trades. When you trade economic divergence, it's impossible to do that, because you have to have a fundamental you know what I'm saying? You have to have a fundamental catalyst driving one of the currencies one way, and you have to wait or hope that there's another fundamental catalyst driving some other currency down the opposite direction. And so you really you have a much better understanding of what the actual opportunity is that you're taking,
Yeah, and you just like he said, you got to wait for these opportunities to align. You can't, the moment you start forcing things is the moment you start, questioning things. And you don't have, again, a lot of this is conviction too. If you don't have conviction on your trade and a full thesis or bias for each currency, you're eventually just going to get washed out, and things are not going to play out. You're just going to be playing around and chop.
Yeah.
Which you don't want to do.
No, 100%. I loved the Euro CAD trade. What happened here?
Yeah, so Euro CAD, this was actually one I was looking at. I saw Boris, one of our students, talk about that too.
One of the best traders in our entire community, man. I think he's just done an amazing job. Recently.
And the thing is, it's crazy because you can start to see like all of our traders when we start to look for trades, and they're kind of calling them out to you, and you check them out and be like, damn, I can't believe I missed this.
Yeah.
We're all on the same page. We're not all doing something different.
Right.
Where so-and-so's doing this, and then we got so-and-so over here doing that. We all have an idea about how we're going to go about this process. So the Euro CAD was just another beautiful trade to where the week before, on the June 5th, we were looking at CAD strength, but now we were starting to see things shift up a little bit.
Right.
So again, you have to also be aware of how these developments are changing, how far the market has pushed a certain ideology in markets or a certain thesis and understanding. So you have to be very cautious of that as well too.
Yeah. I'm just showing him some of the things that Boris mentioned that you sent over to me earlier.
Yep.
Absolutely.
Yeah, he's up. He walked away with that weekend with like 700 pips. So it was an astronomical weekend.
So I'm just showing him here real quick. Let's go down to the 4 hour so we have a better view. As you guys can see, obviously all of these are swing positions. But dude, we're in these trades for 2-3 days. I mean, of course, some of them maybe last 5, 6, 7. But when people are like, "Oh, I can't swing trade," time flies in life like this. Like, let alone a month or a week. Dude. 2 days, you call these positions out, especially multiple, right? Kyler called out like 3 positions on just one day. Those things are hitting TPs, and you're basically making money almost like a day trader every day because some of these trades are getting basically executed with their targets on different days. Maybe one's one day, and then another one's 2 days later. One's 1 day later. It's really awesome. So here you guys can go. You can see here June 15th. Let's see when that was called out. It was on the 16th. You called it. And so you were looking for a buy, TP 137, TP another TP 38, and we ended up running all the way up to the 36 number here. Real quick, hold on, let me see. So TP1 stops, 222. So yeah, so this one it hit off on the first TP here at 37, and we're really just waiting around at this point to see if we can hit off on TP2. So this one's still live. I forget it's the 23rd, and we're not at the end of the month, but you know.
And like a position like this, guys, there's no reason that you should take a loss on this. I mean, we're obviously up. We're up fairly big. We took some profit off at $1.37. But there's no reason like this trade should ever come back around and take you out if you were in it, that it takes you out for a loss. That's just bad management. So things are covered. It's risk-free at this time, and there's profit that was taken off.
Right. Do you want to finish off with maybe this one right here, AJ?
Yeah, AJ was, that was actually, yep. So that was a couple of days ago. So we actually took a break at this level, and this thing played out. That ended up pulling back. So, I mean, guys, we have trades that end up pulling back on us, but if you look, scroll down a little bit more on that.
Yeah.
Yeah, I said that you should take some, right there. I would take some profit off on the AJ trade, 30 to 40% to lock some in.
Right.
So again, you have to lock the profit in. It ends up pulling back. That's part of the business. But overall, we're still up big, and that was something that you just lock it in on. So you can see, the 20th
right around here. That's okay. Nice break, pushed up, turned around.
Yep.
Boom. Nice.
Yeah. So around that high, we ended up taking some profits off. So that would be another winning position. It was just maybe you got out with a smaller win at this point.
I wish it was a losing. I wish it was a losing position because I don't want to give people a false sense of reality. This was just an amazing trading month. But I mean, I never wish positions a loser.
I mean, they can see that things pull back. So I mean, the trades obviously pull back, but the key lesson is just how you manage that position that you're in.
Yeah,
so things pull back on us. It's not like we post a trade and the thing's up like 800 pips.
Yeah.
Definitely not the case.
Yeah, and let me be clear. I don't wish it was a losing position. I want to win every trade. That's just not going to happen that way. The only reason I would want it to be a losing position is so that way people, because we present ourselves online as people who are, trading in capital markets, it's good to show losses so then that way people can feel as if, they are going to come. And you don't want people coming in on, what it is that you're running, assuming that everything's going to make money, because that's just not the case.
False hope. Yeah, you don't want that.
For sure. So, dude, Kyler, I can't say enough, bro. You absolutely killed it. Everything made sense fundamentally. Just watching the whole thing go on as I was trying to set up everything, what we have going on with funding, watching you just take control like that was just absolutely insane. And dude, let's do it again next month, please.
Learn from the best, baby. Let's go.
Let's do it again next month. All right, so guys, that's that 30-minute video. Not bad. I want you guys to stay close. Make sure you guys know what's happening on our end when it comes to markets. If you don't have these indexes, they're linked in the bio. If you want to get inside smart money so you can take all these signals or alerts, whatever you want to call them, to me, there's a lot of context behind each position. So you're getting a lot of information. You're able to make money along the way. So that's cool. And if you want to learn a lot more about fundamentals in general, there's the university. And we're really building out a full-blown platform here. Now that we're going to be able to do funding as well, there's just going to be, I really believe that we can have some of the top traders on the planet funded and, again, trading fundamentally, swing trading the right way and not, in this game in a way that could, destroy their livelihood, because we've heard a lot of horror stories of people losing a tremendous amount of money in this business unnecessarily. So why not get funded so that way you don't risk your own capital and, risk ours. And we're fully capable of taking on that risk, and we're obviously going to have, our circuit breakers on so that way nothing insane happens. And we want to give people multiple chances to, show themselves as being able to be profitable. And if you don't know or you don't have a strategy, learn one. Learn something that's fundamentally based, because that's really primarily how we want all of our traders inside of our firm to run, unless you just really got something amazing on the technical side. But that's that, man. Any last words, bro?
Buckle up, because we're not done with all this. The rest of the year I think is going to be fairly crazy, volatile. So if you guys understand volatility, how to maneuver it, you guys are going to be in for a heck of a ride. So I'm excited. I'm hella excited. I'm
actually nervous about the rest of the year because I don't want the economies to collapse. I don't want, you know what I mean? I don't want shit to shut down. It's kind of nerve-wracking. We were trading good without a recession on the table. You know what I'm saying?
And to be clear, like Cleveland said, we don't want it to happen, but when events like this happen, we're here to take advantage of it. Yeah. I know guys in the fund space as well too that they trade at a high level too. They never wish for these events to happen, like inflation to happen at such a high level where consumers are getting hit. They don't wish for any sort of war to happen, but there's opportunities that if they're there, you capitalize on them. That's what trading is, right? So we never wish for anything like this to happen, because we trade just fine in a environment to where maybe Donald Trump just posts some crazy shit online.
Loved Donald Trump era, bro.
Yeah, we can maneuver that just fine. We don't need the economy collapsing because of a giant inflationary theme and let's say the Russia-Ukraine situation and just all that. We don't need that, but again, all I can say is they're opportunists, right? That's what it comes down to.
Capitalism, baby. Oh God,
take advantage of it.
It's the name of the game. That's what America was built on, except in a horrific way. So there's always pros and cons. All right, guys. Thank you so much for watching. If you've stayed tuned and you're here for this entire time, I want to throw you guys maybe a coupon code for Smart Money just for sticking around. So comment down below. Still here, I'm going to throw you guys a coupon code. If you guys want to opt in, that'll be awesome. All right, thank you for watching. Trade safe. Stay away from people like Kyler. If you're there on the other side of your position, get out. All right?
I'm coming for you.
He's coming for you, baby. All right, guys. Peace out.
All right.